Hi everybody, this is Alex Deproy from Expert Forex, and in this video I'm going to be covering exit and entry techniques. I'm going to start with the exit techniques, which are basically the 12 double in a day strategies that are programmed into the EA. What I want to show you is the basis of all of those strategies. They all start with a particular entry that gets created, and an initial stop is then created after that entry. There are three top-up levels that occur after the entry. So on the screen you can see top-up level 1, then top-up level 2 is not very clear, it's the purple one over there, and then there's a top-up level 3. After that third top-up, the price has to travel to the particular target selected. In this case it's 200 pips away from the particular entry. The other areas that you will see here are the break-even stops, and I'm not going to go into them in too much detail, but break-even stops are calculated so that once there has been a top-up, you cannot lose any money on the transaction. In other words, if the price comes back and hits your stop, you will exit at break even. So that's the basis of the double in a day strategy. It's basically a top-up strategy that allows you to double your account if the price moves from your entry to the target at 200, as you can see above there. But next we're going to look at the entry techniques, and for the entry techniques we use two indicators, the RSI and the envelope indicator. And I'll start with the RSI. The RSI is basically a momentum indicator with overbought and oversold levels. When the indicator goes into the overbought area, it means that from a trading perspective we want to start selling. So the one signal that we use for this trade is that once the RSI is overbought, it is a sell signal. That's the first signal that we use. Secondly, there is a second signal that says no, the RSI has to hook. You see there's a hook there? It has to hook, and only after the hook has occurred will we enter the transaction. So there are two ways of entering the RSI: by it going overbought, or by it hooking and coming back, and then we enter the transaction. So those are the two signals that we use for the RSI. The next indicator we'll look at is the envelope indicator, and that is a pretty easy one in that you create an envelope around the price movement and tries to keep about 90% of the price within those envelopes. So when it ventures out and touches the edge of the envelope, that's quite exceptional, and we tend to then trade the other way. So the price would come up, touch the envelope. That's a sell signal in this particular case because it's the upper channel, and we would sell when that particular signal occurs. So in our entry strategies we have four strategies. We have the strategy number 0. So strategy number 0 is the RSI overbought strategy. As soon as the RSI goes overbought, we would then sell. The second strategy says no, we need the RSI overbought as well as the price touching the upper envelope. So that's strategy number 1. Then strategy number 2 is the RSI hook. All we need is a hook on the RSI, and it comes back, and we are then, that is an entry signal. So the RSI hook is the third entry technique, but it's numbered number 2 on the input. Then the fourth entry technique is the hook plus the envelope touch. So in other words, it's okay to have the hook, but the envelope has had to be touched, or must be touching, in order to activate that transaction. So those are the four strategies. They are a bit confusing in that they are numbered from 0 to 3 instead of 1 to 4, but they are labeled very clearly on the input section. So that explains how the entry criteria, so we use these 4 techniques to enter a deal, and after the deal is entered, the double in a day technique manages the deal. As I've stated in previous videos, you do not need to know the technicalities of these techniques. Most of these settings are determined by optimization and testing, either by the trader or by using the information supplied by us on the website. So let's move on